Ladies and gentlemen, welcome back to another Bitcoin video. First of all, I'd like to apologize for the poor microphone quality. It is very bad. I'm getting a new microphone today, so you won't have to deal with that in the future. But today we've got three topics. Topic one, Bitcoin is broken down slightly in the short term. Is it a fake out? My opinion is that yes, it is a fake out. I do not believe we've seen a Bitcoin breakdown yet, and I will tell you why. Second of all, we have a bearish wedge on Bitcoin staying back about a year from July 2022 on the logarithmic chart. I'll be looking into that, looking into whether that actually is bearish, how bearish is it, and if we drop down from the wedge, where will we go? And then thirdly, I'm looking at various on-chain charts, including Bitcoin balance on exchanges, including Bitcoin's decreasing correlation to any traditional market, and finally, going into the argument that people make that Bitcoin hasn't seen a proper bear market yet and debunking that entirely and brutally. Guys, three important topics in this video, all of which are very important. Short-term update, long-term update, and finally on-chain charts. Without further ado, I'm going to jump right into it. All right, let's get straight into it. What do we have on Bitcoin? What is the daily chart saying? What is the short-term chart saying? This is it. We had an ascending channel formation on Bitcoin. We still have an ascending channel formation on Bitcoin. An ascending channel formation is a bearish structure. It's a structure of exhaustion. You generally see it at the top of upwards trends. And so the fact that we were seeing it form here at the top of this local rally was not particularly bullish. Obviously, we also saw it not only at the top of a local rally, not only after a big move, but we also saw it form into major horizontal resistance. If you look at that red zone, that red box between around 31K, 32K, you can see that that region is actually basically where we saw the bull market bounces and also the bear market rejection over here, as well as rejections over here and here. So that is a very, very major resistance zone. The fact that we saw an ascending channel forming, or we're still seeing it actually, an ascending channel forming on that region, on that range, is not particularly good. And it's not surprising why a lot of people were flipping bullish. It's really not surprising at all. In fact, it's justified. And so when yesterday we saw a 4-hourly candle close below this ascending support line, and signifying the fact that we could be seeing an ascending channel breakdown, it wasn't surprising at all to see a lot of people flip very bearish and take short positions, etc. I've seen many people say on Bitcoin that we're taking a short position under 30.1K, and I can understand why that would have been the case for some people. However, it was a fake out, and it was a fake out because of this. If we look at the daily chart, we can see very easily why it's a fake out. And this is why it's so important to cross-check charts, guys. I can't stress it enough. You have to cross-check your charts. It was a fake out because if we look at the RSI, and you look at the descending RSI resistance line, okay, back here, okay, from January 2023, you can see a retest over here in April, okay, multiple retests. You can also see a breakout here. There was a brief retest here before the breakout. You can see a retest over here in July, and you can also see a retest on this daily candle close and the last two daily candle closes. The reason why we were able to bounce on Bitcoin, even though we saw an ascending channel breakdown, is because we still had support stemming from a daily chart RSI. There was no breakdown on the daily chart RSI. That daily chart RSI has seen a resistance support flip now, and so it's actually putting it in bullish territory. So no, I do not think that Bitcoin has broken down on the daily chart. No, I do not. And I also don't think it's broken down on the 4-hourly chart. And that opinion that I have that it's not broken down yet is justified in the fact that we're able to jump back into the channel. So this puts us in a different position now. It's like, well, is the channel still valid? At this point in time, it's hard to say, but I will keep the channel line there to see if future retests validate it even further. Obviously, if we get clean retests in the future, it's still valid. It was just a fake out. But at this point in time, I would say that Bitcoin is not broken down from anything. Bitcoin is still very much holding support, and I can actually, with a certain degree with a certain degree of confidence, I will actually go ahead and say that the important line you should be watching here on the shorter term charts is actually this pink line here at 29.6K. Because now that we have this uptrending support line, which was previously very strong with 4 clean retests, now that we have a fake out there, okay, the strength of that line, the validity of that line is put up into question. What is still valid is the pink support line, horizontal support line that we held on 2 occasions, and that it looks like we'll need to hold again, because this no longer looks like a channel. It kind of looks like a horizontal range. And so 29.6K is what I'm looking at right now. If we lose that, that is when I'll be confident of the fact that we've seen a breakdown. Obviously, we need to be seeing a breakdown on the RSI as well, which I've just removed. But that's a different story. But basically, no, we haven't seen a breakdown yet. A lot of people have been screaming, breakdown, breakdown, breakdown. No, there hasn't been a breakdown yet. It was a fake out. And will it happen? Will a breakdown occur? That's a different question. You still could say it's likely, and I think you'd be in a reasonable position to say so. we are still at the end of the day, even if we aren't seeing an ascending channel formation, if we can go ahead and remove all this, okay, even if we aren't seeing an ascending channel formation, we still have a horizontal range, okay, at a strong resistance zone that we tested before. So it's not, necessarily too, illogical to say there is a rejection coming. I don't know if I have a strong enough opinion to really say whether it's likely or not. I just don't at this point. I would have to look into the charts a lot more than I have already. As I said, I've been away for 3 or 4 days, but I honestly don't think really, look, here's the thing, right? There's no clearly identifiable structure on short term. And when there's no clearly identifiable structure on short term, you need to rely on the rest of the range. The problem is the rest of the range is not there. The only range we've had here is this structure, which we can't identify. And so since we can't identify what the structure is, clearly, it's hard to say whether it's bullish or bearish. It's just really as simple as that. It's just hard to say right now. I would be waiting, as I said over and over and over again, I would be waiting for a breakout of either the downside or the upside before making a move. I think that's what you should be doing. I think as a breakout trader, that's what I do personally. Even in my altcoin trades, I don't try to predict where it's going before the structure is broken. I'm a structural trader. I'm a breakout trader. So it doesn't really affect me. But what I can say is that if we were to go downwards, and look, here's the thing, right? RSI, stochastic RSI is coming in for a bullish cross. Okay, we just saw a fake out. You could actually make an argument that's quite bullish. But the point is, even if we were to go downwards, okay, it's quite unlikely that we drop too far. Because what we have on Bitcoin, okay, if we go ahead and just delete everything, let's just delete it all. Let's just go delete everything. Let's just go to the weekly chart and just show you exactly. Actually, I'll bring up a different chart, but I've displayed this clearer on. I've got a weekly chart over here somewhere. Let me go ahead and find it for you. Here we go. Okay, so ignore this chart, ignore the yellow lines, ignore the wedge formation. In fact, I'll delete it for you right now. What we have on Bitcoin is this. We have 2 very important lines, okay? Both these lines represent the top of a range and the bottom of the range, okay? So right now we have a line here at 24.5K, which is the bottom of the range, right, that we're in right now. We've got a range here between 24.5K and 31.6K-ish. That's where we're at right now. That is the current range. If we drop below 24K, we're re-entering the bear market range. If we break above 32K, we're entering a fresh range, a new range, a range where we saw the majority of the bull market. So right now, we're kind of in no man's land. This is a bearish range. This is a bullish range. This is no man's land. We're in kind of the neutral zone. And so if we were to go down, okay, we have very, very strong support here from the bottom of this range. We also have multiple indicators like bull market support band, like the 200-week SMA, like things like the volume profile, like the Gaussian channel center line, all of which are layering, okay, the part below us for support. So for us to drop below 24.5K would take a really, really, really big event. It would take something massive. It would take very, very bearish price action. I just don't see it as likely to drop below 24.5K, especially at this stage in the cycle. Now, technically speaking, from a cyclical perspective, we can do it. It is possible, and it wouldn't invalidate any cyclical structures. But the amount of support we have between here and there is just massive. So, look, and I just don't see it as likely that we break below all that structure we've worked so hard to get above over the last 6-7 months. It just doesn't seem likely to me. So I would say that it's very unlikely. And look, if we did it, we'd be forming an M formation. We'd be dropping back into a previous range. It'd look very bearish. We'd probably go down to new lows at that point. So I don't think it's likely from a charting perspective at all that Bitcoin goes below 24.5K for any extended period of time. So that means that basically, if Bitcoin does happen to break down and correct from this range, we would be finding a bottom anywhere in this orange circle, right? So if we were to correct, we'd find a bottom anywhere in this orange circle most likely, and it'd probably be around 27.2K or 28.6K, because that is where the vast majority of the weekly chart indicators are. That's where the vast majority of the weekly chart support is. So even if we do go down, and this is an opinion you might have heard repeated over and over again on this channel, I'll keep repeating it until it happens, because it's still relevant. Even if we do go down, I don't think we'll go very low. Maybe 27.2K, 28.6K, at the very, very, very worst 24.5K, but I just don't see it as particularly likely. I just really don't. I'm going to be brutally honest with you. I don't think we go below that at all. But those are the kind of levels we're looking at. So even if we go down, it's not really brutal at all. And if we go upwards, it's excellent. So the risk reward here on Bitcoin for macro term is just excellent, to be honest, because we're following 4-year cycle. We're still on track for everything cyclically. And even if we go down short term, it's just going to be a short term correction, probably nothing more. Now, if we do happen to invalidate what I'm saying here, and we do drop below 24.5K, cool, we can de-risk immediately. Because I'll tell you right now, If we drop below 24.5k, we re-enter this range here. We break the support that was held up by these two rejections, okay, and this support zone over here. We break that. We go below 24.5k. I will be de-risking my Bitcoin portfolio instantly because that is not good. So at least, at least the good thing about these charts is this: whether you're bullish or bearish, at least the ranges are very easily identifiable. And with easily identifiable ranges, you can make a good plan. The plan for us is very clear. We drop below 24.5k on a weekly candle close, for example. We get the fuck out. That's a very good plan. And that's the benefit of clear ranges. So I'm glad we have that established. But yeah, look, as I said, I don't think it's likely we go too far down. If we do go down, and if we do go up, it's just nothing but bullish, really. So it's great to see it. But overall, yeah, I do believe that was a fake out. I don't believe Bitcoin's broke down yet. So that's the first part of the video. So what's the bad news? What's the bearish chart I was talking about before? This is the bearish chart. Now, this is a logarithmic chart on the weekly chart. So if you're going to draw it up, it's not going to work on a regular weekly chart. You have to go to weekly chart and flip to logarithmic scale. The reason I'm flipping to logarithmic scale is because logarithmic scale is used when there is a large price range. People get very confused about when to use logarithmic. You do not use logarithmic scale on short-term price ranges. You do not use logarithmic scale on small price ranges. You use logarithmic scale simply when there is a large price range. It doesn't matter about dates, it's ranges. So if I go back to linear, you can see this chart is hard to draw. If you look downwards, the bottom of this chart is clamped together, it's crunched together, it doesn't really work. You can, especially if you zoom out further and further, it becomes more and more valid, because how are you meant to do analysis on a longer term chart when the linear looks like this? You have to go to logarithmic, and then it looks much more suitable. You can start to do analysis on it. That is why you use logarithmic. It is a long-term chart scale that used to make the price action more digestible and long-term, and more specifically, it's about price range rather than long-term. People just say long-term to kind of simplify it a bit more. It really is about price range, not really the date range. You could have a chart that has the same price range for 15 years. You would use linear. You wouldn't use logarithmic. You only use logarithmic if the price changes so dramatically over the period of time you're looking at that it becomes hard to digest and analyze without logarithmic. So logarithmic chart, weekly chart, what do we have here? We have actually, unfortunately, a bearish ascending wedge formation. An ascending wedge formation with support lines stemming from August or July 2022, going through to around here in April 2023, going through from December through to a retest in March, through to a retest in June. So this is bearish. Obviously, I don't need to explain to you what an ascending wedge is. Most of you know what that is by now, but if you're at this point in the cycle in the bear market, you probably know what a descending wedge is. Basically, it's a pattern of exhaustion. It's not a good thing. You generally break them to the downside. It represents the fact that, yes, we have an upwards trend, but it's unsustainable. You're going to break it to the downside eventually. Now, that's not good, obviously, and that generally means you see a breakdown. Now, obviously, if we do break down, we have some very logical support zones. First of all, we have a support zone before the breakdown over here around 27, 28. And then if we do break down, we have the support at 24.5k. I am relying on that 24.5k support holding. I've said it before at the start of this video. My daily chart, I believe that although no cyclical damage will occur if we break down below 24.5k, it is very, very, very much in the best interests of Bitcoin to hold that level. We do not want to re-enter this range here. That is the bearish range. We do not want to go there again. If we are going to go there again, the number one cause of that happening would be this wedge. The good part is ascending wedges and wedges in general are very, very unreliable in terms of their measured moves. They're not reliable at all. And especially so when you're talking about measured move on logarithmic charts. Logarithmic chart patterns cannot be taken seriously for their measured moves. This is a common known fact amongst analysts. So we can't go ahead as analysts. We can't say, oh, let's grab this target here, let's go this measure move and apply it here or apply it there. That simply doesn't work. You cannot take logarithmic chart measured moves seriously because they're so extrapolated by the altered scale. This is where a lot of people go very, very wrong. This is where a lot of the 3K targets you were seeing 6 months ago, you might be seeing now still, came from. They came from analysts who don't know what they're talking about, taking measured moves on logarithmic charts seriously. It's simply not how analysis works. You do not take measured move on logarithmic charts seriously. But obviously, it doesn't change the fact that the overall structure is bearish. So yes, this is a bearish structure, but I'm hoping that if we do break this to the downside, if we do break down from this structure, we will get caught here for support at 24.5k. Unfortunately, there's not really much I can say about it, other than that at this point. That's all I can say about it. We will obviously break this wedge to the downside eventually just because, well, look, here's the thing, right? We don't have to break the wedge to the downside because we could break above it, okay? But we do have to break the support line to the downside because eventually this logarithmic line will go so high and we won't be able to keep up, and it will break to the downside because we just won't be able to keep up. It's unlikely Bitcoin keeps going like this. That's what I'm saying. So eventually we'll break it to the downside. Depending on when it happens, we'll have to look at what has occurred and look at the nearest support zones. But right now, the critical level we're watching based on this chart is 24.5k. I just thought I'd bring this up. I don't want to come across as bullish biased. I'm obviously macro bullish on Bitcoin. I do my best to present bearish data as well, obviously. I'm a breakout trader, as you guys know. So me looking at this wedge here doesn't really do much for me. It doesn't really make me bearish or bullish. I'm a breakout trader. I've held that opinion consistently throughout this video. Even if you remember the start of this video, I go back to the daily chart. I'm a breakout trader. I don't care what Bitcoin's doing right now. I'm a breakout trader. I trade ranges and I trade breakouts. So right now we're in the same range. Doesn't really matter what pattern we have. It's the same bloody range. It doesn't matter to me. When we break down from this wedge, which I think probably will happen, okay? When we break down to this wedge, then I'll start caring about it, and then I'll look at the support zones. I'll look for a potential bounce, or I'll look to see whether it goes down further. But right now, I just want to bring it to your attention. That's not very good. It's not good that we're seeing that at all. It's a bearish thing, and we need to monitor it. But right now, it doesn't really give us much because we're still ranging in it, and it hasn't broken down yet. So we'll just keep an eye on it at this point. Again, apologies for my stuttering. I'm a bit sick, so you have to bear with me. Now we're heading into the last part of the video. Okay, last thing, guys. There's a few on-chain charts to look at here. I don't necessarily look at on-chain too much. I think that on-chain, on a side note, I think that on-chain is pretty useless. And the reason why I think it's useless, well, it's not useless, but it's very good at confirming biases because there's so many different on-chain charts. There's hundreds of on-chain charts, 800, 900 on-chain charts, probably more than that. And if you're bearish or bullish, you can pick 10 bullish ones, 10 bearish ones pretty easily at any point in the market cycle, and you can support your argument very strongly. So I don't think it's necessarily a good way to do analysis, but I will show you a few things here. Bitcoin balance on exchanges is at new lows we haven't seen in 5 years. That's great to see. We also have, just survived here, okay? The worst. Okay, I'm going to say it again. Look at this chart. This is actually very important that people understand this because I see a lot of people saying, "Oh, Bitcoin didn't see a real bear market. Bitcoin didn't see a real correction." First of all, you're just wrong. Okay, we saw a 79% loss on Bitcoin. In previous market cycles, we saw 84% and 86% in the same period of time. Okay, the difference between 79% and 84% is 5%. That's not much. Okay, so let's not act like because Bitcoin didn't see 5% extra downwards price action, it didn't see a bear market or some shit like that. Okay, we went to 15k. If we were going to see 5% more downwards price action, we would have only gone to 14.2k. All right, the difference between 15k and 14.2k from a top of 69k is nothing. Bitcoin did see a bear market. It saw it in the same period of time as the other bear markets. Okay, I don't understand this whole thing that people say, "Oh, Bitcoin didn't see a real correction." It's just complete bullshit. Look at the charts, mate. Open your eyes. Of course it did. Anyway, other than that, look at this chart right here and you can see that Bitcoin actually saw the worst, basically the worst in terms of year-on-year change. Actually, yes, the worst in terms of year-on-year change period of time it's ever seen from 2021 to 2022. So let's be a little bit realistic here when we're talking about, oh, Bitcoin didn't see a correction. It's just complete bullshit. So yes, of course it did see correction. In fact, in terms of yearly returns, year-on-year returns, I should say, from 2022 to 2023, in fact, from 2022 to basically a couple of weeks ago, Bitcoin saw the worst period of time it's ever seen in the entire market, in the entire price action of Bitcoin. So of course, it saw a bad period of time. It saw a terrible period of time, to be frank with you. And there's really no argument you can make that's supported by the charts that would suggest anything differently. I really don't like hearing that argument because it's just simply not true. And it's very, very clearly an attempt to kind of push forward a bias rather than to push forward a reality about the charts. So no, Bitcoin has not seen a weak bear market. Its bear market was on par with other bear markets. And from many metrics, it was actually worse than other bear markets. Percentage downwards is not the only metric you can look at. That's not the only thing in the world. So let's just note that. And even if it was the only thing in the world, it was pretty much on par anyway. So I think that the bear market is over for sure. I mean, I've been saying that since bloody November, and I think that these charts coming out now support that quite strongly. But look, here's another thing as well I want to look at. This is quite important. Bitcoin's correlations to the S&P 500, the gold, and the dollar. Okay, so basically, this is Bitcoin in terms of its correlation to multiple on-chain charts. Multiple traditional market charts, and you can see that Bitcoin is generally negatively correlated to the VIX and negatively correlated to the DXY. It's also very positively correlated to the S&P 500 and positively correlated, kind of, to gold, but specifically to the S&P 500. Right now, we are seeing Bitcoin's positive correlations. We've been seeing this for about a year, guys. Almost a year. Bitcoin's positive correlations are trending towards zero, and Bitcoin's negative correlations are trending towards zero, meaning that Bitcoin is becoming less and less linked to any market as time progresses. Bitcoin is becoming more and more independent as time progresses, which is great to see. We will look into this more in tomorrow's video. I don't want to dilute this video with this information now because it's actually going to take a while to look into. I'm going to bring up all of these charts individually and show you what exactly it means and what it might mean for Bitcoin's future. But I want to quickly introduce that topic so you're prepared for it tomorrow. Guys, the overarching point is that Bitcoin is becoming less and less correlated to anything, including its reverse correlations. People like to say Bitcoin's reverse correlated to DXY. That is true, but it's becoming less and less reverse correlated to DXY. People like to say that Bitcoin is positively correlated to the S&P 500. That is true, but it's becoming less and less positively correlated to the S&P 500. And so the actions of these markets are becoming less and less relevant to the actions of Bitcoin. And by the way, guys, that's why we've seen things like CPI and things like FOMC not cause any real dramatic price action for Bitcoin for the last 6 months or so. If you remember a year ago, or a year and a half ago, or 2 years ago, every CPI, every FOMC led to a major move on Bitcoin. Now it's just leading to very, very minuscule short-term price action and then nothing. So it's important to note the reason why these things are occurring. We'll look into that tomorrow and the effect of them. So that's all information for tomorrow. But guys, thank you so much for watching the video. Let's look at a few things before we end it. First of all, guys, the Bitget exchange, 5 times lower fees than Binance, non-KYC, right? So you can sign up from anywhere in the world. USA using a VPN on the sign up and selecting other as country of origin, so you can get access from USA as well. And then, guys, lowest fees in the game, as I said before. Protection fund, reserves information, exclusive reward center, and a 15% trading fee discount for signing up using my referral link. Go ahead and do that in the pinned comment and description below. Then we've got the Crypto Academy. If you want to learn how to trade, this is the place you can do it. Want to learn how to analyze charts, market patterns, indicators, etc., find trades, market psychology, everything you need to become a trader is in this course, and you can check out the website in the description below and throw us an email, and the email address, again, is linked on the website. And then finally, guys, the VIP group. If you want to trade altcoins on VIP with me, I'll give you entry zones, I'll give you take profit zones, I'll give you stop losses, I'll give you everything you need to trade the coin, and when it activates, you can enter after charting it up following my instructions. That's on Telegram there, all the information for the group, as well as our trading results, which is a 79% win rate over the course of 9 months, is all there in the information group. Guys, all of that stuff, Bitget, Crypto Academy, VIP. It's all in the description below. Check it all out. Thank you for watching. Hope you enjoyed, and I'll catch you guys tomorrow for the video. Cheers.